Good morning, this is May Valensky with Driving Markets. Okay, let's go over what's happening over in the Far East. So the Hang Seng yesterday closed down 6% on the back of the coronavirus and the lockdown of over 50 million people, especially in the Shenzhen city in the Guangdong province, which is the Silicon Valley of China. And today the Hang Seng and the Chinese, Australian, all markets are up between 1 and 2%. I want to focus today a little bit on the price of oil and commodities. Wow, what a seesaw action in oil. So oil peaked at around about $132 a barrel. If you remember, I mentioned last week that I expected to go to 150 to 200. However, that did not hit because it is a price move based on anticipation of where the market was at. And that anticipation is purely based on people's investors' feelings and volatility. So the markets moved all the way up in oil to $132 a barrel, and yesterday came all the way back down to $96 a barrel. So in other words, it wiped out all of its gains from the beginning of the 21-day war between Russia and Ukraine. That just goes to show you that when you're trading on anticipation or trading on emotions, then there is a very extreme whipsaw volatility action. Take that into account when you're looking at financial markets. The same applies for commodities and the metals, not so much the soft grains, but definitely gold. Look at gold. Gold has retraced itself all the way back from $2,010 an ounce all the way back to $1,922. That is significant. Again, seesaw action, whipsaw action, and it is basically due to anticipation of where prices will be. So I wanted to pay attention to this. Even though the prices have come down, it is likely that those prices over a period of time will creep back up. Oil has moved up a little bit today by 1%, but you will see that the markets will move in that direction if the war continues and if there is a supply driven problem. Remember, with a lockdown in China, the price of oil was affected by two factors. Number one, the potential of peace talks between Russia and Ukraine, which has now said, Ukraine's now said that they will not join NATO, and the lockdown in China means potentially the global demand for oil could drop significantly. Based on that, oil came down from those two significant factors. The fact that oil came down pushed airlines and cruise lines and airlines were all pushed up significantly on the back of cheaper oil. So take into account that some of those shares reached an all-time low, or not all-time low, very lows, about a week ago, where the price of oil was running at $132 a barrel, and now those airlines and those cruise liners and the leisure companies have shot up on the back of that. However, there will be a supply-driven issue regarding China's lockdown, something to be aware of. Today is the summary and the final outcome of the FOMC meeting in the States. So they will be increasing interest rates for the first time since February 2018. Wow, that is significant, because if we're going to now go on an interest rate cycle, remember that everything's affected by interest rates, not just your mortgage and your credit cards and your loans and company loans and company finance. What's also affected is the day-to-day cost of living. That is going to be affected because that could have an impact on inflation going forward. The idea of increasing interest rates is to tame in the inflation. What are we looking at in terms of cryptocurrencies? So I mentioned there is a correlation between Tesla and Bitcoin yesterday, and there is a view that Bitcoin may be a hedge on inflation. One of my senior colleagues yesterday stated that's very, very unlikely. However, it could be because it's a limited asset and it is sought after. So you could have Bitcoin as a hedge on inflation. Also, look at Tesla. Remember I reported yesterday Tesla that fell on Tuesday by around about 4%, 5%. Yesterday went back up 5%. So what does that mean? It means Tesla is range bound. So around about the $760 to $800 level, it's range bound. Hasn't yet broken out of that, and it could go either way. My suspicion is that it's likely to go down if interest rates rise, because it is a significant part of the Nasdaq, and the Nasdaq will be hit significantly if interest rates goes up, because it's a speculative index, as I've stated on many occasions. Also, the US 10-year Treasury went to 2.26% yesterday, so the price came right down on the US Treasury, and that is mainly due to the fact that interest rates are likely on the way up, and therefore that will make the US Treasury less attractive, especially if peace breaks out between the Ukraine and Russia. Then the US Treasury will probably fall even further, because if you remember from all the driving markets videos I've said, the US Treasury, 10-year Treasury, is a safe haven. And the final point is that Russia today needs to pay $117 million in interest payments on its sovereign bonds, and it is likely to default. It's offered to pay them in rubles, but who the heck wants rubles these days? And I think that is an automatic default if they do pay in a currency that is non-US dollar denominated. So this is Mayor Valensky with Driving Markets. You can catch me on LinkedIn, on WhatsApp. Instagram now is Instagram Driving Markets. You can message me, you can email me. I'd be more than happy to hear from you. Have a good day. Speak to you soon.